There's a number the government doesn't want you to see. It's not classified. It's not a conspiracy theory. It's right there in the fine print of the Bureau of Labor Statistics report released on January 9th, 2026. Quote, data for October 2025 were not collected due to the federal government shutdown, end quote. Read that again. They didn't collect the data. For an entire month, the government had no idea what was happening in the economy. No employment numbers, no inflation numbers, no consumer spending data, nothing. And here's what makes this absolutely terrifying. That missing data wasn't from some random month. October 2025 was the exact moment when everything started to crack. That was when tariff pressures began hitting consumer prices. That was when the job market started its free fall. That was when the recession actually started. And the government has zero accurate data from that critical moment because they were too busy fighting over a budget deal to do their one job, which is to tell us the truth about the economy. Now, some of you are thinking, okay, they missed 1 month, so what? And that's exactly what they want you to think. But I'm going to show you why this isn't just about one missing month. This is about a systematic destruction of economic credibility that's going to blow up in everyone's face in 2026. Because when you can't trust the data, you can't trust anything. Let me take you back to what actually happened, because the mainstream media buried this story under election coverage and celebrity nonsense. On October 1st, 2025, the United States federal government shut down. Not a partial shutdown, a full shutdown. Congress failed to pass appropriations legislation, and the entire government ground to a halt. It lasted 43 days, from October 1st to November 12th, 2025. That makes it the longest government shutdown in American history, longer than the 35-day shutdown in 2018 and 2019. 1.4 million federal employees didn't get paid, critical services stopped. And here's the part, nobody's talking about all economic data collection ceased. The Bureau of Labor Statistics, which produces the monthly jobs report, stopped surveying employers. The Bureau of Economic Analysis, which calculates GDP, stopped collecting data. The Census Bureau, which tracks consumer spending, went dark. For 43 days, the United States government was flying blind. And when they finally came back online in mid-November, they didn't go back and collect the missing data. They just pretended October never happened. Now here's where it gets really disturbing. The Congressional Budget Office estimated that the shutdown would reduce GDP growth by 1 to 2 percentage points in the fourth quarter of 2025. Goldman Sachs said the hit would be even worse, potentially slashing growth by 1.15 percentage points. But here's the problem. We'll never know the real number because the data from the shutdown period is corrupted. When the government finally released the GDP report for Q1 2026, it showed the economy contracted by 0.5%. That's negative growth, the first quarterly contraction since Q1 2022. But that number was revised down from an initial estimate of negative 0.3%. They got it wrong the first time. And if you read the fine print, they admit that the shutdown made it impossible to get accurate measurements. The BLS had to rely on what they call non-survey data sources. That's government speak, for we guessed. They didn't collect 100,000 prices like they normally do for the Consumer Price Index. They didn't survey tens of thousands of employers for the jobs report. They filled in the blanks with estimates and assumptions and models. And when the numbers finally came out, they showed inflation dropping to 2.7% in November. Markets cheered. The Fed breathed a sigh of relief. Everyone said, see, inflation is cooling, everything's fine. Except ICICI Bank Global Markets Research put out a report that said, quote, concerns about the accuracy of this print remain in place given that there was no data collection in October and that it did not start until mid-November. Hence, it is quite possible that these latest estimates are distorted and possibly exaggerating the disinflation trend, end quote. Translation. The inflation data is fake. Not intentionally fake, but unreliable. And if inflation data is unreliable, then the Federal Reserve is making interest rate decisions based on garbage. They're flying a 747 with broken instruments. Now let me show you what's actually happening in the real economy while the government's fake data says everything is fine. The December 2025 jobs report showed the economy added only 50,000 jobs. That's the weakest monthly gain in over 3 years. For the entire year of 2025, the U.S. economy added just 584,000 jobs total. That's down from over 2 million jobs in 2024. The unemployment rate hit 4.6% in December, the highest level since 2021. And if you dig into the numbers, you'll see something even more terrifying. The only reason unemployment isn't higher is because people are dropping out of the labor force entirely. The labor force participation rate has been declining for months. That means millions of Americans have simply given up looking for work. They don't count as unemployed in the official statistics, but they're not working either. They're just gone. Vanished from the economic data. And because the October data is missing, we have no idea when this trend actually started. Was it in October during the shutdown? Probably, but we'll never know for sure. Good question. Because of that shutdown and the missing data, nobody actually knows where the economy really is right now. The official story says we had a, quote, modest slowdown, end quote, in late 2025, and that 2026 will be a, quote, soft landing. But look at what they're not telling you. The Bureau of Economic Analysis literally had to change its release schedule because of the shutdown backlog. GDP reports were delayed. Income data was delayed. Inflation data was delayed. They even admitted that seasonal adjustment models had to be re-benchmarked because the shutdown broke their historical patterns. That means the formulas they used to smooth the data are now based on corrupted history. It's like trying to predict the weather when your thermometer was broken for a month. Every forecast after that is off. And yet the Federal Reserve is using these broken numbers to decide when to cut rates in 2026. The Congressional Budget Office already expects the Fed to start cutting this year. Bond markets are pricing in multiple cuts. Stocks are partying like the worst is behind us. But what if the data is wrong? What if inflation isn't actually under control? What if growth is weaker than the revised numbers suggest? What if the recession has already started, but the models haven't caught up because October and November are full of guesses instead of facts? This is where it gets dangerous for you. Because every decision you make about your job, your savings, your mortgage, your investments is based on the assumption that the official numbers mean something. If the numbers are broken, your decisions are blind. Think about how this plays out in real life. Say you're a small business owner. You hear on the news that inflation is back near 2% and that the job market is strong. You decide to expand. You take out a loan, you hire 2 new employees. You stock up on inventory ahead of what you think will be a strong 2026. But what you don't see is that real wages after inflation have been flat for months. Credit card delinquencies are climbing. GDP already shrank earlier than reported. And the only reason the data looks okay is because a 43-day shutdown broke the inputs. So when the real downturn hits, your customers pull back. They stop spending. They cancel orders. And you're stuck with dead employees and inventory you can't move. Now zoom out to the national level. If businesses across the country are making those kinds of miscalculations at the same time, because they're all looking at the same flawed data, the crash becomes self-amplifying. This is exactly what happened before. In 2007 and early 2008, most official data still looked fine. The model said housing was contained. The experts said there was no recession. By the time the statistics admitted the truth, the market had already collapsed. People lost jobs, homes, and retirements because they trusted numbers that were months behind reality. The difference now is that back then the data collection machinery was still intact. Today, it's compromised. So here's the question nobody in Washington wants to answer. How do you make rational policy decisions in 2026 when a key part of your 2025 data is missing or distorted? You don't. You guess. You spin. You hope the models are close enough. And when they aren't, you blame something else. Geopolitics. Consumer sentiment, weather, anything but the fact that you allowed the longest shutdown in history to blow a hole in your own instruments. This is why the phrase soft landing should scare you. Because a soft landing requires precision. It requires an almost perfect read on where growth, inflation, employment, and credit are at every moment. It needs accurate gauges. Right now, those gauges are cracked. Some of them are lying. And the people flying the plane are pretending they can still see clearly. They can't. Now, let me show you what the smart money is doing while the official data claims everything's under control. Hedge funds just rotated billions of dollars out of technology stocks in Q4 2025. Billions, not millions. They moved into defensive sectors like aerospace, defense, and healthcare. This isn't normal portfolio rebalancing. This is institutions preparing for a downturn. Nvidia dropped 7% in weeks as major funds dumped their positions. These are the same people who have access to private economic forecasts that you'll never see. They're not waiting for the government to tell them a recession is here. They're getting out now. Insider stock sales hit extreme levels heading into 2026. The buy-to-sell ratio among corporate executives is running at multi-year lows. For every insider buying shares of their own company, there are 3 or 4 insiders selling. These are CEOs and CFOs who know exactly what's happening inside their businesses, and they're liquidating. Meanwhile, retail investors, the regular people, are still pouring money into index funds and retirement accounts because the headlines say the coast is clear. This is the exact same pattern we saw before 2008. Smart money exits. Dumb money holds the bag. And speaking of what the elites are doing, gold just hit $4,500 per ounce in January 2026. That's up over 3% since the start of the year. It's marching toward 5,000. Gold doesn't rally like this when everything's fine. Gold rallies when people lose faith in currencies and governments and official data. Central banks around the world have been buying gold at record pace for 3 years straight. They know what's coming. They're protecting themselves with hard assets while telling you to trust the system. So here's what happens next. The Fed is expected to cut interest rates in 2026 based on the flawed data from the shutdown period. They think inflation is under control. They think growth is stable. But what if they're wrong? What if inflation comes roaring back because energy prices spike or tariffs hit harder than expected? What if the job market is weaker than the models show because October data is missing? The Fed cuts rates thinking they're engineering a soft landing. Instead, they pour fuel on an inflation fire, or they cut too late and the recession deepens. Either way, you lose. If they cut and inflation surges, your cost of living explodes. Groceries double. Gas hits $6 a gallon. Your paycheck buys half of what it used to. If they don't cut or cut too late, borrowing costs stay high. Mortgages stay expensive. Businesses can't get loans. Layoffs accelerate. Unemployment spikes. Housing crashes. This is the trap that broken data creates. You can't make good decisions when your instruments are lying to you and the people in charge aren't going to warn you when it goes wrong. They'll blame Russia. They'll blame Congress. They'll blame consumer confidence or some other vague excuse. But the truth is, they destroyed their own credibility when they let a 43-day shutdown blow up the data collection system during the most critical economic period in years. So what do? First, understand that official numbers are not gospel right now. If the government says inflation is 2.7%, add a point or two for the distortion. If they say GDP contracted 0.5%, assume it's worse. The models are broken. Act accordingly. Second, diversify out of pure dollar exposure. I'm not saying sell everything and buy gold bars. I'm saying don't keep 100% of your wealth in assets that depend on the dollar holding its value. Look at what central banks are doing and consider doing the same on your scale. Third, if you have a job that depends on discretionary consumer spending, start building a backup plan now. Because when the real slowdown hits and it's not being masked by broken data anymore, the cuts will come fast. Fourth, pay down high interest debt while you can. If the Fed pivots and inflation comes back, credit card rates will go to 30 or 40%. If recession deepens, you might lose income. Either way, debt becomes a death sentence. Fifth, stop trusting that someone in Washington is going to save you. The same government that shut down for 43 days and broke its own economic data system is not going to fix this before it gets bad. They'll react after the crisis is obvious. By then, it's too late for you to prepare. The government shutdown of 2025 wasn't just a political circus. It was an economic catastrophe that destroyed the data infrastructure we rely on to navigate the future. And in 2026, we're all flying blind because of it. The only question is whether you're going to realize that before the crash or after. If this video opened your eyes to what's really happening, share it. Send it to your family. Post it on social media. Because the mainstream media isn't going to tell them the truth. Subscribe to this channel and hit the notification bell because I'm going to keep tracking the real data, the stuff they don't want you to see, and I'll keep you updated. As this unfolds, leave a comment and tell me what you think. Do you trust the official numbers anymore? Have you started preparing? Let me know. Thanks for watching. Stay alert, stay prepared. And whatever you do, don't believe the lies they're telling you about soft landings when the instruments are broken.